Good afternoon, and thank you for joining us today. My name is David Talbot. I'm Managing Director and Head of Research here at Red Cloud Securities, and I'm delighted to host a Red Cloud webinar on critical minerals today, specifically fluorspar, gallium, and germanium. And we've got Aris Strategic's CEO, James Walker, to join us today. Now, during today's webinar, he will provide a corporate outlook and corporate overview and outlook, and then we will take your questions. We'll get to the questions, as many as we can. Please type them into the chat box you see on the right side of the screen. Now, before we kick things off, first we need to discuss the fine print. During this Aris webinar, forward-looking statements may be made. I direct listeners to the company's forward-looking statements outlined on page 2 of its corporate presentation that can be found on its website, arismining.com. For Red Cloud Securities, I'd highlight this webinar is for information purposes only. It should not be considered a solicitation or recommendation to buy or sell. We note this call does not consider a particular situation or needs of individual investors. Participants should rely on their own investigation and seek their own professional advice before investing. So please see our most recent research located on the Red Cloud website for specific disclosures on Aris Strategic Mining. With that, I now turn it over to James to update the audience on Aris.
Thanks a lot, David. So I'm very happy to share my screen and walk you through a bit of our corporate presentation. As David said, it's a bit of an overview of what we're currently doing, but also a bit of background for the people who are not familiar with the story on the industry in general and what we've been working on in the past few years. So. One question I think it's always just important to start with, just because it's a mineral that a lot of people have heard of, is what actually is fluorspar. So CAF2, fluorspar, it's a critical mineral, also an industrial mineral used in the manufacture of ubiquitous amounts of final products. Aluminum, hydrofluoric acid, fluorine, lithium-ion batteries, steel, refrigeration units. It's quite a comprehensive list. The US used to actually have a fairly robust and substantial fluorspar industry until it got shipped overseas. So one nice thing is that we're kind of bringing in a whole industry back to the continent. Currently, the US imports 100% of this product from overseas. And if you consider something like the steel industry uses something like 80 million tons of steel on an annual basis, which requires 20 pounds of fluorspar in each ton, you can get an idea of the sort of quantities of fluorspar that are required in just one industry alone. Fluorspar breaks down into two principal products: metallurgical grade, which is used in things like steel, cement, glass industries, and then that usually has a purity range of fluorspar in anywhere from, could be 50, 60, all the way up to about 90% typically, depending on the end user's requirements. And then you've got acid spar, which is the higher purity grade product, just more concentrated. And that goes into things like aluminum refrigeration units, lithium-ion batteries, manufacture of fluorine, hydrofluoric acid, and things like that. It's listed as a critical mineral by the US government, and actually by the Canadian government too, because it is considered vital to the economic security of the country. It was an industry that was very heavily controlled by China in the past, but actually China in recent years has mined out all of their high grade, has now become a net importer of fluorspar. And so high grade deposits, actually the US, by virtue of shipping the industry overseas, has been left with a number of high grade deposits, which gives it a bit of an international and economic advantage when it comes to fluorspar. I touched on this a little bit, but currently we're seeing a huge demand. I mean, certainly in our company anyway, as we get closer towards production, and a huge number of companies have reached out to us. I would say principally the steel industry has been one of the big ones, certainly with regard interest in our metallurgical grade, which will be the first product that we'll produce at our Delta facility. But actually, there's been a step up in interest from chemical manufacturers too, sort of the Honeywells of the world that have an interest in the product for chemical processes, hydrofluoric acid, fluorine, and that kind of thing. But what's also very interesting at the moment is that the nuclear industry, which is being built back quite comprehensively in the US at the moment, and I think the Department of Energy has put something like $8 or $9 billion in the last couple of years into building back national infrastructure around nuclear. Has led to a massive increase in interest in fluorspar, and that's principally because the feed material for enrichment, whether it's laser enrichment or gaseous diffusion or centrifuges, is the same thing. It's UF6, uranium hexafluoride. And so obviously you can understand that the two principal ingredients that go into the feed for nuclear reactors is uranium, obviously, and fluorspar, which is less well known about. So the fluorspar industry in the US alone is a $2.5 billion industry. I mean, I touched on a few of the items that fluorspar goes into. What doesn't get talked about very much is that outside of the USGS's estimates of about 600,000 tons of raw fluorspar being imported into the US on an annual basis, the number is actually significantly higher if you consider all the downstream products that get imported that have fluorspar as a mix within the product that gets imported. So even on the lithium battery front, there's obviously it's driving a lot of the demand for fluorspar, particularly as the electric car market increases quite substantially, and China is going the same route with regard the electrification of its transportation infrastructure, and that's obviously squeezing the demand on fluorspar, because there's actually more fluorspar used in a lithium-ion battery than there is lithium, which again, it's an interesting market that gets overlooked a lot. But I'm sure everyone's familiar with all the different things it's used for: refrigeration, air conditioning, all of these different items in your own home utilize fluorspar, which is why it is that critical mineral that's so in demand, and why as we've developed, there's been so much industrial interest in our product. So we'll talk a little bit more about how we fit into this sort of this big industry landscape. So a number of years ago, when we identified the fluorspar mine, it was a fully permitted mine that we bought out. We actually realized that the district had lapsed in terms of claims, and so we staked the entire area. That gives us about 6,000 acres of claims where there were fluorspar showings, and that obviously we excluded anything where we didn't see any prospects around fluorspar recovery. But this gave us sort of a district-sized scale of operation. It was very fortunate that came with the permitted area that would allow us to mine a lot more quickly. And obviously, as soon as we did that, we started work on exploration, geotechnical work, LiDAR, metallurgical, geophysics, assaying, drilling, all the normal typical development milestones you go through as you put together the economic analysis of a project. Because we were a very individual company doing something that was considered very critical to the future security of the country, there was always a federal and state level interest in trying to support us, and that took the form initially of a USDA loan proffered to us at preferable rates. That gave us the ability to buy things like our industrial site, buy our first plant, and build our warehousing out. But that was followed up by programs from the state, including a $10.5 million bond that we used for the purchase of our flotation plant to produce that higher quality grade acid spar product. And we've since then we had institutional investment come into the company, and then finally earlier this year, the state of Utah granted us a further 11 million that we were able to actually utilize for accelerating the mining of the project, which meant shotcreting, added installation, ventilation installation, all that sort of stuff. So now we're up to an MSHOR compliant mining operation, and we just need to wait for the first plant to be ready, and then we're actually ready to start producing. And it should be worth mentioning too that we actually did close a raise very recently, and the circumstances around that are quite interesting too. We've had an enormous amount of interest from retail to buy our stock, but there's actually been very limitations in the past around their ability to buy on the OTCQX. So there has been an intention to use some of those funds for an uplist, as well as accelerating the construction of the flotation plant so we can meet what could potentially be some very large government contracts that we're looking to finalize after the government shutdown is completed. So as I mentioned, we did manage to stake the entire district scale. On the little bottom left picture, you'll be able to see some of the mining sites that we'll be working on over the coming years. But second from right, you'll see the Lost Sheep mine site, which has got the ore body just to your bottom right in the picture. We'll be mining that out first. That's been drilled very comprehensively, and that's where the adits and ventilation and all the mine works have been installed. But across the entire mountain range, there's been a very significant amount of work that's been done. So we already know where the secondary and tertiary mine sites will be here. It's a fairly odd deposit in the sense that it's non-contiguous pipes, and so you can never put a global resource on this. And you would basically operate this operation like a quarry, where you would have 2 to 3 years of delineated resources, and then you would advance secondary sites alongside the mining of that product. So the nice thing too is that we were able to get that processing facility in place a couple of years ago after the USDA. We did buy a 50-acre industrial site, and that warehousing there, you see we've recently renovated that and cleaned it all out, and it's now ready for operation. Likewise with the mine site, all the heavy equipment that we need, forklifts, loaders, dozers, excavators, dump trucks, all those kind of products have been bought already, and we own those. We're in a very nice, comfortable position now where the plants have been purchased, the heavy mining equipment has been purchased, and we have the land, we have the rail spur, and all those different necessary items for a production operation. Some of the pictures you can see on the bottom right, those are a bit old now, but those are sort of interim construction snapshots as we build out our lumps plant. And I think there might actually be some more updated pictures in this presentation a bit after this, but the anticipation is actually that plant was scheduled to be finished this year. And I think at the latest, maybe that drifts into January 2026 just because of Christmas. But really, we're on the doorstep now of actual first product, and we've even got the rail spur constructed, so we're actually ready to ship product out to what will initially be steel producers through material brokers. Actually, these are a bit more updated pictures from the site. You can see that the plants we're currently installing, they're quite large systems, and actually these don't even do it justice. They're much longer plants, much more comprehensive, but it sort of gives you an idea of the sort of scale and size. But we've made very significant progress on the processing facilities in the last couple of months, and that's principally where our focus has been aimed at, just getting this plant online, especially as the mine works are now installed and properly ready to start delivering product. It's interesting enough, it was mentioned to us previously as we were beginning our exploration, but we initially identified through SGS assaying that gallium and germanium were present within the ore, and Amy's national lab together with Idaho State University confirmed some very substantial quantities of gallium and germanium in the ore. And this is kind of interesting because there's been a sort of economic warfare between China and the US over rare earths, and they've cut the supply of these minerals to the US. I'm not sure what the situation will be regarding the future sanctions around these products, but certainly from our perspective, it's the Fluorspar operation can economically stand on its own legs, and this could potentially just be a byproduct that is pure benefit but we would adapt our flotation plant accordingly to produce some gallium and germanium in the future, provided the metallurgical work shows we can economically recover it and sell it, for an economic amount. But we're currently doing that work with the Ames National Lab as well as the Idaho State University, just looking at that metallurgical work and what would necessarily have to be done to adapt the flotation plant to produce that rare earth mineral concentrate. So we have a very clear path to get to production now. In fact, even this slideshow might be a little bit out of date because that secondary ventilation system is in place, and actually we still get questions about it, so I should really get around to press releasing about that. But we've even been pulling some product out of the mine and stacking it at surface just to get ourselves ready for that initial production. But as soon as that plant comes online, either end of this year or early next year, whatever it is, we'll start feeding in that that initial product into the lumps plant to produce that metallurgical grade for the metal industry. But alongside that, we do want to accelerate the construction of that flotation plant because, as I've alluded to, we are anticipating working with the government on some fairly large contracts that are based around the higher purity grade products, acid spar. And so we obviously want to put ourselves into a position where we'll be ready to meet the obligations of that anticipated government contract. But as we mine that first mine site, we'll already begin. We have our own drills on site. We own them. We'll already begin looking at the construction of secondary mine sites at the Spore Mountain area, so we can either concurrently or consecutively mine out more Fluorspar product for our processing operations. So certainly, we're fairly well funded at this point in time, which is a very nice position to be in. The government money that came in from the state of Utah earlier this year allowed us to accelerate some of the mining operations, but also some of that was incredibly useful for driving some of the accelerated construction around our first plants, and then the secondary equity raise that we did this year is going to be predominantly used, I think, to drive the construction of that flotation plant. But certainly, we want to. There does need to be an examination around uplisting it, particularly in the US, where there's a lot of frustration around the ability to invest into the pink sheets. But we're in a financial position now where we can actually begin to do some of the implementation of the upgrades to the facility to begin looking at extracting those gallium and germanium products as well. The market's sitting in a very nice place at the moment with regard price. I mean, the acid spar there is listed as $550 a ton, but even when we're talking with the government about potential contracts, upwards of $600 a ton is really the sort of range that we're discussing with them. And we do have offtakes in place, which is a very nice place to be in for our metallurgical grade. And certainly, if we finalize the agreements after the government shutdown, we'll have offtake agreements in place for the acid spar too. Certainly, the demand for the product is in excess of what we will be able to be producing, even if we do open up secondary and tertiary mine sites at the Spore Mountain area. So we had a very recent rise in the share price as well, and I think that was driven by some speculation in the market because some government solicitations did name us as a sole source supplier even before any formal announcements were made, and certainly we weren't in a formal position to formally announce anything, but certainly there was speculation among retail and getting ahead of that. And we had been anticipating actually a raise that we were putting together with Red Cloud even prior to that spike, but we had to act very quickly based on that market activity, so we didn't lose that financing opportunity. But since then, even the share price hasn't returned to its pre-spike levels, and it's sitting quite substantially above it, actually about 20 Canadian cents above where we were sitting prior to the spike, which is nice place to be with $10 million banked, in addition to the monies that we've got in Utah for construction. So we're sitting in a very nice position at the moment as well. And I can't anticipate any sort of near-term requirements for capital prior to any sort of revenue that we expect to get within the company. So, well, you don't need to know all about these sort of people, but I might just highlight that actually a couple of these have been very instrumentally important. Bob Lee, who's a director, actually runs several Fluorspar operations in Asia, and actually our plant designs came from his Thailand operations where he exports in excess of about 100,000 to 150,000 tons on an annual basis. So building back an industry from scratch is very difficult when there's no expertise in country. But having that ability to tap into resources from experts that are producing has been very, very useful. Paul Sargent obviously has a huge amount of experience in exploration, runs his own public companies, but he's been very important for the expansion of the operation. And Raul, he worked on Europe's largest Fluorspar operation, the Minerza project in Spain. So actually having people who work quite comprehensively on Fluorspar has been of enormous benefit to us, especially as you're doing a lot of things blind. And certainly when it came to even working with SGS on the metallurgical work, it was very difficult even to design processes to recover our Fluorspar, because it was just a process they weren't very familiar with. So people like Bob and Raul were very instrumental about actually getting that metallurgical work to deliver us the recoveries and grades that we actually needed to make an economic operation. So thank you very much. I think that that ties us up, and it was around the 20-minute mark, so we should have plenty of time for questions. But yeah, happy to answer anything that anybody's interested in with regard our operation. So.
Perfect. Well, thank you very much, James. Very informative. We will now kick off the Q&A portion at this time. Reminder to everybody, you can type your questions into the chat box. We already have a few questions here, James. So, you mentioned this is a $2.5 billion industry with aluminum production, air conditioning, polymers, lithium-ion batteries, nuclear fuel cycle. All these aspects are delivered into. Is there a part of this market that is growing to a greater extent than others?
Yes, certainly. I would say actually the metal industries are fairly stable, like aluminum, steel, even though they're arguably the biggest consumers. The lithium-ion battery market is definitely growing the fastest, and the squeeze in recent years on the price. So it doesn't have a spot price exactly, Fluorspar. It's a bit more complicated than that, but there has been a drift towards appreciation of price in recent years, and certainly if you were to go back 5-6 years, you would see prices for acid spar around the 400 mark, whereas actually in the US at the moment they're really hovering around the 600 mark, and actually though briefly during the tail end of COVID. Prices spiked up to $700, $800, $900 a ton, and that was principally being driven by the lithium-ion battery market. So certainly we expect that market to grow, and projections show it. The market is still growing, despite the fact it's getting a bit less press than I think it historically was. But that's the fastest growing. Increasing demand from any sector on the Fluorspar industry. The rest are fairly stable.
Right. Now, do these different sectors require the same finished product, or, I guess more accurately, which ones do you plan to deliver into? And is there any part of this industry that's actually more profitable than others?
So it's a very good question, because there are two principal grades, and even though it's a bit more complicated than even that, the metallurgical grade, or met spar, and acid spar grade. Met spar grade is anything between 60 and 90% generally, and acid spar is anything with a purity level of sort of 97% plus. What's quite interesting though is that there are periods at which the lower purity grade can actually sell for more than the higher purity grade. This can actually occur around the form of which the metallurgical grade takes shape. So for instance, if it's in a powdered form, metallurgical grade typically sells for a bit less than in a pelletized form or a lumps form. And one of the reasons why we're building up this fairly substantial lumps plant in Delta is that will allow us to produce the metallurgical grade that retails for a higher premium because it is in a pelletized form. And so there will be occasions actually in the future where we will produce a lower purity product that will actually spike slightly above the higher purity product. But what I would say is that it's still going to be the same industry we'll be catering to. It's the steel industry on the metallurgical front. I would say on the acid spar front, what is quite interesting at the moment in the US is that there is a sort of reindustrialization of the country combined with a sort of a more re-onshoring sentiment. But that's also resulted in even the government looking at restocking some of their national stockpiles of minerals. During the Clinton administration, the minerals that were within the national stockpile were sold off very cheaply. And so now the current administration is actually looking to try and restock a lot of those. But what they want to restock is the acid spar, the higher purity grade. So we are looking to form part of that national solution to provide that product. So it's interesting that one of our biggest customers might just be the national stockpile of minerals on the acid spar grade. It doesn't mean we can't produce both products, and I think that's very likely what will happen. But certainly, the potential government contracts, will put us in a position where the operation is very comfortable, and then anything we can produce in excess of that is a bonus.
Mm-hmm. You sort of touched on a couple of my next questions here. You know, how incentivized is the U.S. government to get that fluorspar industry back up and running? And I guess, you know, right now, U.S. and China is in discussions, probably talking about critical minerals, which, you know, China has made it very, very difficult to export lately. You know, is this a real risk to the U.S. government that even if they do get an agreement, they still need to get their domestic supply up and running?
It's actually a very good question. It's because these are sort of geopolitical considerations, maybe outside of area strategic mining's expertise, but it's certainly we've come into contact with government officials who have given us a bit of a background about some of the strategic long-term thinking. Reindustrialization of a country is a lot more difficult than offshoring industry, and certainly what the experience has been is that it's been much more complicated than anticipated, and that's principally because, say, take any industry and you're re-onshoring it. Actually, all the feed industries that feed into that one industry have also been offshore just because they atrophied and disintegrated because the customer was shipped overseas. So it generally building up from the base is principally how they're now looking at tackling it. And this might be one of the coming challenges for most Western countries in the coming years, if not decades, is that re-onshoring industry is going to get a lot more focus. One of the things they are looking for is that in order to do that, you do need to have a mineral supply of product. And so the stockpiling is part of a national security endeavor to ensure that the country is able to actually reindustrialize and not get stuck on critical on just the raw product alone that would need to feed into the manufacture of certain products. If you were re-onshoring steel as an example, then suddenly you need a fluorspar industry, and if that industry then needs to be built back in tandem with a number of other industries. They certainly gave us a very interesting insight into things like resuming shipbuilding within the United States and the challenges of that because of all the different industries that fed into it. It's actually a much more complicated logistical challenge than you might initially anticipate. It's not just a matter of even throwing money at the problem. Certainly when we were discussing with them the rebuilding of the nuclear industry in the United States, all of the different components along the fuel supply chain, including the fluorspar industry, will take a considerable amount of time, no matter how much money you throw at the problem. But in the long run, that's actually very good for us because it does ensure that there's going to be a big onshore industry that we can cater to, and we get to be part of the build back effort, which does mean investment into our company, and does mean that there are going to be government contracts that we can take part in as part of the build back effort. But it's certainly a much more complicated picture than people might realize when it comes to reindustrialization.
Mm-hmm. No, certainly security of supply is the key here, and you could probably use the last few years really as a warning. And you mentioned the U.S. nuclear industry; they just got $80 billion in commitments from the U.S. government today. So probably good for your business as part of the fuel chain there. So maybe specifically, where do you stand when it comes to government support and offtakes? I think you did mention potential Department of Defense or Department of Energy contracts might be announced when government gets back in session.
So, certainly. So we have already been in contact with a branch of the Department of Defense, or Department of War, actually, as it's been renamed now. Certainly, the Defense Logistic Agency has been tasked with rebuilding some of the national stockpiles of minerals. I'm aware that there was a sole source solicitation put out very recently with us named in it. Now, obviously, the contract has not been finalized because of government shutdowns, but we are obviously working very closely with the government, and they have visited our operation, and they're very familiar with what we're anticipating doing, and even things down to the specifications of the grade that they would require for their national stockpiles is something we're obviously working with them to examine. This has obviously worked out very nicely for us in the sense that we had just initially anticipated catering towards predominantly the steel and chemical industries. On the steel industry and on the chemical side of things, the raw product for hydrofluoric acid and fluorine, which is, I think, really about 2/3 of the national requirement for the raw fluorspar product. But there's this additional benefit that we inherit now because of this desire by the government to build back that national capability.
Mm-hmm. Okay. Now, your 100% owned Lost Sheep mine in Utah, currently being completed there. You talked a little bit about the deposits, the continuous pipes, as you said. Mining here is somewhat hand to mouth. How much potential mill feed can you see ahead of you at any given time? Do you need to drill out a year or two or more?
It's a good question because, my preference as a mining engineer would be always that we put a substantial resource on a project and then obviously take that through development to get it up to a reserve, but with a non-contiguous deposit type. And if you imagine sort of several hundred non-contiguous pipe structures, if you were to drill out all of those, you'd spend the next 15 years drilling and spend a couple $100 million just drilling out the product. And it obviously does not make any economic sense to do something like that. And maybe this is one of the shortcomings of 43101 estimates, is that they are really, there's an implicit assumption within that kind of estimate that you would have a certain deposit type which is very well suited to putting it together. So certainly when we took it to mining engineers and we were asking them to produce feasibility studies for our project, their plan involved drilling out 1 to 2 years of production at any one time, quite comprehensively drilling out that one site, putting together mine plans for that one operation, and then immediately once that is get going, shifting over the exploration work to develop the mine plans for the secondary and then tertiary and so on mining operations. So that's ultimately we deferred to the expertise of the mining engineers on this one about how we do it. So certainly we've identified several hundred pipes. The assaying across the entire district has been fairly uniform, so we know that the grades that we've got are world-class grades. Essentially, a lot of the high grade internationally has already been mined out. And one of the nice things for the US is that because the industry was shipped overseas, there's been this sort of preservation of this high-grade product within the country that we now fortunately have available to us at a time when everyone is dealing with much lower grade feed products, which gives us obviously access to better margins on our operation. But certainly that's how it's going to look. The way a pipe needs to be mined in this case is, if you can imagine sort of a corkscrew adit system that runs alongside a pipe running tens of meters into the ground, and then offshoot adits that intersect the pipe at different levels. And then with a drill and blast operation from the top down, you funnel that mineral through an ore chute and then excavate it out through the adit and deliver it. And because of that mining technique, that's going to be your bottleneck. It's actually how much earth and ore you can remove from the adit, rather than the capacity of the processing plants. The processing plants are pretty huge, so they would have the potential to produce something like 150, 200,000 tons of product in an annual basis. Whereas each mining pipe cluster that we're mining, really you're sort of looking at about 130, 140,000 tons of ore you can remove on an annual basis, which translates into somewhere between about 50 to 60,000 tons of final product. So that's your bottleneck, is the mining. Now, there's no reason why we couldn't double or triple that based on if we were to get additional mining projects going alongside the initial one at Lost Sheep. But it has to be very prudently managed, and I think it's prudent at this point to get ourselves into a position where we are revenue generating, and the operation is self-sustaining, and then we can be looking at increased production expansion through those additional mining operations at the site.
Okay, so mining is the bottleneck, but I believe that you said that's already underway, and those plants, and a few people here online have been asking, when do you expect to start that Metspar lumps production, and then what are your expected production volumes as you ramp up through 2026?
So the anticipation actually with the lumps plants, which produces the metallurgical grade, was actually going to be this year, and certainly, actually, the main machinery and components will certainly all be assembled this year. Some of the components we did import from abroad around motors and control and instrumentation. I think some of those weren't really suitable for the US electrical works, so we are replacing those currently. But even with factoring into consideration those, I mean, that still puts us at a launch date at the end of this year, but certainly at the latest, it would be early next year, after everyone resumes after Christmas and commissioning that initial plant. And the flotation plant, we'd always anticipated ramping up the construction of that after the metallurgical plant was completed. And the reason why is then we can just shift the construction crew straight over to that secondary plant as it begins operation. But in anticipation for what we believe will be government contracts coming in that we'll be working on. We did want to do that equity raise. Obviously, we were working with Red Cloud on that, so we could put together the resources so we could start looking at the permitting and planning and construction of that flotation plant ahead of schedule, so we can get that plant online sometime around about Q2, Q3 2026, so we can start producing that acid spar next year as well. And there's no reason why you can't run the plants actually alongside each other. In fact, some of the initial grinding, crushing process actually is shared between the two facilities. But you can then produce a combination of products that actually increases your recovery, which obviously will then increase your economics. So the plants are complementary to each other, even if they will be commissioned at different dates. But anything that the lumps plant produces that could be an ideal feed for the flotation plant later will just sit in stockpile until it's ready to be processed by the flotation plant later.
Okay, so you've got Metspar lumps production planned, and then you've got the acid spar flotation plant production planned. How much of the lumps production goes straight into the acid spar? Can you maybe just give us a sense of economics for these different streams, if you will? Is one preferred over the other?
So I would say initially we'll only be producing lumps, and so as many lumps as we can produce, the better. If we imagine an operation where both plants are actually running alongside, I would say that the recovery will probably be better with a flotation plant. But there will be some product that will just not be suitable for acid spar that will then go into lumps production. So they're, at all times, they'll likely be running alongside each other. I'd imagine once the flotation plant is online, there will be a shift over towards a preference to produce more acid spar. But there actually can be a bit of flexibility here, because I mentioned very briefly in the presentation that there are occasions where the metallurgical grade can spike above the selling price of the acid spar. And when that happens, it's advantageous for you to use less product to produce more money. And so at that point, you can have a sort of a shift over towards metallurgical grade to take advantage of those unusual market conditions, which do periodically happen. So there will be a preference, I think, for acid spar, especially for big government contracts. But at all times, we'll be running metallurgical grade product for the steel industry. And I don't know the percentage breakdown, but maybe you can think of it sort of an 80-20 split on a very regular basis when there's no anomalies in the market, as being sort of what we anticipate being a regular percentage breakdown output.
Okay. And maybe can you give us a sense of expected costs or margins for these two products?
So we did do an economic analysis, so effectively a feasibility study a number of years ago with some independent engineering firms. And at the time, they were looking at our OPEX per ton as being in the region of about $200 a ton. I would say with inflation, increased costs, even if that was to rise to $250, even $300 a ton, our margins are pretty healthy, given that we anticipate the actual selling price to be for acid spar in the region of about $600 a ton, and the metallurgical grade still would be over $500 a ton. So the margin per ton is actually pretty healthy. And the reason why that is that if you can imagine a gold operation, you're dealing with grams per ton. With our operation, you're dealing with 500 kilos per ton or 300 kilos per ton. It's the raw feed is just much more substantial, the final product contained within the raw feed. So the number of personnel you need, the intensity of the processing operation, all of those things are substantially lower scale than you would anticipate for any sort of project where you're dealing with much lower grades like rare earths or gold or anything like that. So because of that reason, our OPEX is relatively low, and certainly on a day-to-day basis, actually the number of personnel we require is not very substantial. Certainly, you could see with big mining operations, hundreds of people involved, whereas really we fall a combined operation with both mining personnel and processing is really a couple dozen people at most, is really how it falls down. So it's a very nice position to be in, where that OPEX can be kept quite low. So.
Mm-hmm. Okay, and we'd expect some optimization as production begins as well.
Certainly.
Maybe what are the options you have to separate out the rare earth elements, that are in the ore right now? Do you anticipate any other minerals besides gallium or germanium?
It's a very good question. So the gallium and germanium, Amy's National Laboratory obviously ran those independent tests, and they returned some very promising results. Obviously, that's not the end of the story at that point. Then you need to begin to look into the metallurgical process to create a gallium and germanium concentrate. And we're currently looking at that metallurgical work now in partnership with the National Laboratory and another university. But once you have that metallurgical process, then you can begin to look at how you would adapt your plants. We're lucky we can adapt a plant, but in most operations, you would look at the design of a plant around that metallurgy. Fortunately, we're not in that position. We can adapt our flotation plant potentially to produce that concentrate. Now, I don't want to speak too soon about this operation because it's sort of early stages of investigation. But certainly, the flotation process would normally be the process that you would utilize to create that concentrate that would then be shipped to a smelter for more advanced processing. But because we have that flotation plant, there is scope now for us to be able to adjust it so we can produce that concentrate. And obviously, that's what we're working towards now. Obviously, this is all being done alongside our current ramp-up operations. But I really hope we can work out how we recover those products, because they would almost be a pure bonus because the ore is being mined out anyway, and certainly the gallium and germanium, if not being contained within the fluorspar, is in the waste stream. So it would just be a almost pure benefit to be able to recover those minerals.
Mm-hmm. Do you have solvent extraction anywhere in your flow sheet? Something that might help you get out the rare earths?
Yeah, so we do have a solvent extraction process. It's probably not as comprehensive as you would need for gallium and germanium because they are a bit particular. But that doesn't mean we can't adapt the process to incorporate a bit more of an intensive process just to set up the feed grade so we can extract that gallium and germanium. This is a little bit new for us, and I don't want to expend too many resources on this just because I want the project as de-risked as possible to get ourselves into revenue. But once we really are there, we're in a very comfortable position to make those adaptations. It might not be initial, and we might even get into acid spar prior to the gallium and germanium production, but certainly our long-term strategy would be to be producing that concentrate. As far as any other minerals go, we'll have to take a closer examination about it, but it's interesting that the only beryllium mine in the whole country actually is just next to us, and there's almost certainly a concentration of beryllium in there, and if that is the case, we would probably just look to partner with the material operation to provide them a material that they could use to recover beryllium, and maybe there's actually scope on their operation to provide us a feed that we could use to recover fluorspar. It's got to be worked out though.
Okay. Now you said the company is cashed up to Metspar production. Might you need to come to market again to build the acid spar plant, or maybe accelerate further exploration?
So we were actually in a very comfortable position to get ourselves into both metallurgical grade and acid spar grade even before we did this very recent raise. But the reason for the raise is so we could accelerate the actual construction of that acid spar facility, because we did anticipate that there would be a need to produce acid spar in a significant amount of quantity next year. So now we're in a position where we can complete that accelerated timeline. I can't foresee any near-term financial needs. If we do an uplist, there could potentially be money raised as part of that IPO process, potentially. But we're still in very early phase of examining that because we've only just finished that very recent raise. But certainly, I think there's been a lot of frustration amongst US retail that they've not been able to participate in or purchase shares in areas, especially as it's a very unique US story, given it's the only permitted fluorspar mine in the country. If we do that, then maybe there might be a raise as a consequence of doing that uplist. But certainly, as far as our operations go, I don't foresee any pure raise just for the prospect of putting extra dollars in the account.
Okay, and maybe just to clarify, they weren't able to participate in the deal, but you are listed on the over-the-counter exchange.
That's right. So we are on the OTCQX, and actually, to be honest, there are a lot of US retail that are very able to participate, and our volume in the US has been very decent. But certainly, there are brokerage firms that don't manage pink sheets, and for that reason, a lot of people who work through brokerages, which is a huge portion of them that we have a day-to-day correspondence with, have not been able to invest in the company just for that reason. So we just anticipate that it would open up a lot more retail ability to invest into the company, as well as volume, which obviously in the long run for the company as a public company is very beneficial. So it is something we do need to address. It's been a number of years where we have been aware that there has been this issue with regard the ability for certain brokerages to buy our stock, and so I do want to solve that for people. They have been very patient, and I do want the stock to be as readily available to as broad a market as possible in the long term.
Would you consider moving off the CSE and moving into the TSX Venture?
I would say the CSE has been very good to us, actually, and I've never encountered people who have had issues buying on the CSE in Canada. So there hasn't been much of a conversation around that side. More on the US side of buying stocks.
Fair enough. Okay. So, we're coming up to the top of the hour, so maybe one final question here. Assuming Utah's your focus as production years, especially, but Kentucky, Illinois area, that's had a lot of past fluorospar production activity. Do you have any projects in that area? Are you looking down
Yeah,
the road?
we do. So, and just by way of background, the Kentucky and Illinois area was the predominant producer of fluorspar prior to the industry being shipped overseas to China. And so a lot of those projects were very profitable until China flooded the market with cheap product. And so they got shut down and almost preserved. And so there is almost certainly a lot of potential there that's still there. It would still need a lot of work. I mean, you would still need to re-drill everything, do all your exploration work, mine plans, and obviously the building of plants and things there. So it would be a bit of a multi-year burn. But certainly we anticipate there being a very decent opportunity there to expand out of Utah into that area. I think our initial expansion will likely be within the Spore Mountain area, secondary mine sites, that kind of thing. But beyond that, there almost certainly is a very large potential in Kentucky and Illinois, and reviving that part of the world, world's industry there. So.
Okay. Well, thank you very much, James Walker from Aris Strategic Mining. I appreciate you joining us today.
No problem at all. David, thank you very much for hosting. And thanks everyone for jumping on the call.
Yes, thank you everybody else for tuning in. After our upcoming fall mining showcase, Red Cloud Securities will be back in a couple of weeks. We'll have a flurry of webinars, including Next Gold, LaFleur Minerals, Seabridge Gold. But before that, our biannual conference occurs on November 4th and 5th. There will be at least 6 keynote speakers, I believe, about 80 presenting companies at this year's event. It will be held in person at the Sheraton Hotel in Toronto. Again, that's November 4th and 5th. You can register at www.redcloudfs.com. So have a great day, everyone, and thanks for supporting Red Cloud's webinar series.